Hello and welcome back to another episode of the Scale Smart podcast. I'm your host, Jacob, and also the founder of NetScale Growth. Today, I have the pleasure of being joined by the co-founder and CRO of AI Risk, Joe McMann. Joe, thank you for joining me today.
It's our pleasure, Jacob. Thanks for having us.
So, Joe, before we get into the questions, I want to understand a little bit more about what you guys do at AI Risk and what your background and expertise consist of. So do you mind sharing it with me and also the audience?
Sure. So said most simply, we integrate high-risk AI safely and securely. And what does that mean exactly? We work with anyone who is being told how they're going to deploy artificial intelligence at the enterprise level versus being able to choose just any of the publicly available LLMs, OpenAI, Gemini, Mistral, etc. So if you are a bank or a broker dealer or a financial services company or a healthcare company whereby the SEC or HIPAA or you have regulators who are telling you this is what's going to be acceptable behavior and this isn't, you're going to have to be able to track all of the things that your users are utilizing inside of your corporate infrastructure. If you're going to have to be able to supply reports or feedback to anybody who's overseeing the infrastructure of your artificial intelligence platform. We allow for the integration of any large language model, either used singularly or holistically across a platform, connected to your entire tech stack, utilizing hundreds of agents all wrapped underneath an umbrella of what we have patented, which is AI GRCC. So governance, risk management, regulatory compliance, and cybersecurity.
Amazing. Well, thank you for sharing that intro. And obviously, as the co-founder and the CRO of the business, Joe, you're obviously in charge. You wear a lot of hats. What would you say were some of the biggest challenges you faced when it came to scaling AI Risk into where it has become today? And from that, what would you say are some of the challenges you guys are seeing today?
So I like to say that we reverse engineered the entrepreneurial process, meaning that most people start with a problem and then they build a solution. So between the three founders, we have over 100 years of experience in financial services. So what we did is we actually said, if we were to sit in our old seats inside of a bank or an asset management company or a broker dealer or an RIA or a family office, from the perspective of safety and security, what would we need as it pertains to a holistic platform to deploy artificial intelligence inside of a business that we worked for? So my background is 25 plus years in investment banking, 15 of which are investment banking type functions, 15 of which were with Citigroup in Manhattan, formerly Solomon Smith Barney. Our CEO, Alec Crawford, spent about 15 years on the sell side working as a publishing fixed income analyst, working for Morgan Stanley, Credit Suisse, First Boston, Deutsche Bank, Goldman Sachs, and then transitioned to the buy side where he worked for the Ziff family at Ziff Brothers Investments. The Ziffs were one of the first original throughout the late 90s, early 2000s seeding platforms. So they seeded Ziff Brothers Investments. They seeded Dan Ock when he came out of Goldman Sachs and he launched Ock Ziff. They seeded Jim Chanos at Kinnikos. And then, so there Alec ran risk and compliance. And then he transitioned over to Lord Abbott, a $300 billion asset manager, whereby he ran risk, compliance, and technology, which included AI inside of a very large asset manager. And then our third co-founder, Frank Fitzgerald, who is the one who is building the platform, first digitized HIPAA-compliant healthcare as part of United Health Group, and then was the first programmer, first developer, COO, and CTO at O'Shaughnessy Asset Management, which is Jim and Patrick O'Shaughnessy, which was then subsequently sold to Franklin Templeton. So three founders, all with unique, however, somewhat overlapping backgrounds sitting inside of financial services, who built a platform specifically for high-risk AI to be deployed holistically inside of a financial services company However, that widget does translate to other industries like healthcare, like government, anywhere where there are rules defining how you're going to utilize AI inside of an enterprise.
So obviously, with you guys being three founders, all with different expertise, all with different but similar backgrounds, and in the, let's say, industry which you're in, I speak to a lot of AI companies. I also work with a lot of AI companies as well. So it's interesting to get other people's perspectives on what's happening in the industry right now. So going back to that first question a little bit, Joe, what are you seeing right now happening within the market in terms of potentially not just you guys, but also other companies being able to scale to that next level?
Yep. So if you think about where we started circa 2 years ago, people were spending a tremendous amount of time building large language models, meaning you have the 7 largest tech companies in the world that, to be factually correct, this year are going to spend circa $360 billion in a race, literally day by day. Who is dropping? Who is building? What is the newest, best, fastest, most efficient way to go about trying to increase the slope of Moore's law, right? We're trying to get somewhere more quickly than we've ever gotten before. However, we are transitioning away from large language models being the thing that every company is trying to build internally. Because, as an example, JP Morgan is going to spend about $10 billion a year building their internal large language models and generative AI tools over the next 3 years. So cumulatively, they're going to spend about $30 billion. They've got 2,000 individual developers working on 500 proof of concepts that are all proprietary and internal. However, the 7 largest tech companies in the world are going to spend over $1 trillion over the next 3 years. So 30 billion versus $1 trillion is a bit of a rounding error. And what people are finding is they're now fully pregnant with whatever choice they've made, meaning that it isn't actually building it, which is the problem. It's the upkeep and the maintenance, which is the massive drag going forward. So what you're seeing is a pivot away from people trying to build large language models into figuring out how they're going to use large language models. So people are now starting to utilize the publicly available providers and then all of the, at this point, hundreds of models that exist underneath the Bedrock platform, the OpenAI platform, the Meta platform, right? The Anthropic platform. People are utilizing all of those models in a specific way based upon what the model's expertise is currently and could be used most efficiently for going forward. And now we're starting to move from a large language centric model into an agentic centric model where things like MCP, model context protocol, are starting to become critical, because it's not necessarily about the model itself. It's about all of the stuff that you can build and utilize off of it that does jobs.
And I think AI is massively evolving in, well, let's say AI regulation as a whole and cybersecurity threats. So, what proactive steps are you taking to ensure that you guys over at AI Risk, you're remaining ahead within the market, whether that's product development, whether that's customer outreach, or just general market positioning?
Yep. So I would say originally our thesis was that we built out an a la carte menu whereby you could hook up programmatically via API to either any of the sleeves of our business. So, governance, risk, cybersecurity, compliance, or any of the individual components of our business. You could hook up to an individual agent. You could hook up to any of our connectivity points. We thought that the largest companies in the world would be the ones whereby they would say, okay, we're really good at doing this. We're not particularly great at doing all of these other things. So we're going to need bolt-ons to our platform. What we did find over sort of the last 18 months is we're now actually living in a world of the haves and the have-nots. You've got the largest companies in the world. I like to say that there's maybe 1,000 people in the world that could build what we've built or do what we do. I'm fortunate that I have two of them with me, and I'm not one of them, meaning that there's only so many people on the planet that have the capabilities of being able to build out these type tools and platforms. And if you don't have one of them, then you're sort of stuck trying to figure out, okay, well, what's my next best option? And that's where companies like ours come in, because if you're a couple rungs down and you're not one of the largest companies in the world that has $10 billion and 2,000 people to throw at a problem, if you're a community bank and you've got $10 billion in assets under management and you've got 500 people that work there and you've got 17 branches and you're just trying to keep pace with JP Morgan and some of the largest banks in the world, because again, it's haves and have nots. And the delta between those that do and those that don't is actually growing significantly on a daily basis. So you're not able to just maintain pace. The gap is actually getting wider on a daily basis. So what we've done is we've actually moved down the curve, and we're helping all of the companies that sort of sit outside of the Fortune 1000 try and maintain pace, if not close the gap. Because if we can provide the exact same tools and the exact same experience that others are building internally and give smaller companies the capability to close that gap, that's sort of what we're trying to accomplish. And then as it pertains to our company specifically, not just necessarily about how we're trying to help our clients, we were forward thinking enough to actually patent our technology over 2 years ago. That patent has now been granted first mover status and was also published. So we're just waiting to actually receive the full patent at this point. And at that point going forward, we will have a differentiated recognition of the level of the technology that we're able to provide to all of our clients and also use internally for our own purposes.
And how do you see AI kind of transforming, let's say, risks, governance, and compliance practices across different regulated sectors? And what role are you going to play in shaping that?
Yep. So I guess we look at it in terms of two different things. The first is you could utilize our AI system for all of the things that I've described. So you can use the governance component, regulatory compliance, cybersecurity, risk management, right? That's what the platform does.
Hmm.
But on top of that, you can then use the proprietary agents that we've built out internally to then harvest information as a compliance officer, or
Mm.
harvest information if you're in charge of risk management, or set up infrastructure for cybersecurity. So the platform itself acts as a protective layer for artificial intelligence. However, artificial intelligence can also do the jobs that sit inside of a bank or a broker dealer. We have agents that help the compliance department do their job better. So there's two ways that you can actually look at it. One is utilizing the platform to protect and serve you from AI itself. The other one is as a compliance department, or as a risk manager, or as someone who's in charge of cybersecurity, utilizing the agents that sit inside of the platform to just help you do your job better. Those are the 5 agents that sit on your desktop, and they help you do your job better every single day.
And looking into the future now, Joe, in terms of scaling the company to that next level, it could potentially bringing on more clients. It could be expanding into different marketplaces. What are some of the goals you guys have got in the next, let's say, 6 to 12 months in terms of getting AI risk more out there?
Yep. So our goals are very, very simple and they last both short term as well as intermediate term. Think given the optionality of what's actually occurring and the pace of change that's happening, being able to adapt and evolve and pivot very quickly is actually the key metric, because anybody who can tell you where the world of AI is going to be in more than 6 to 9 months is just completely fabricating the truth. I
Mm,
can't tell you where we're going to be a year from now. I am 100% guessing. I can say best based upon my educated opinion and the fact that we're monitoring this incredibly closely on a daily basis. Like, this is my best guess. But when you look at the optionality of the matrix tree and you say, okay, if then this is what we will do next, there's multiple choices at the end of each one of the potential, downticks in the optionality tree. So in reality, what we're working on right now is we're closing our seed round. We're going to be above $2 million in ARR by the end of the third quarter. We'll hopefully be somewhere around five towards the end of the year. Obviously, that's a significant inflection point. We've got a lot going on as it pertains to multiple products that we've been dropping over the course of the last year, and those all starting to gain traction. We're headed out to a wealth management conference in September called Future Proof. And this would come on the backs of us winning the #1 Wealth Tech Award at another conference called RIA Edge in June. So 3 months later, we're looking for a continuation of us going commercial enterprise in that vertical specifically. Between myself and our CEO, Alec Crawford, we're speaking at 33 different events in the months of September, October, November. So our visibility will be significant into the back half of the year. And then hopefully, as we get into this time next year, we're pushing up against that $10 million ARR inflection point, whereby at that point, we'll really be raising a significant A round and then taking it to the next level again.
amazing. Sounds great. Sounds like you guys have got some great things on the horizon. And Joe, if people wanted to reach out to you or find out more about what you guys have got going at AI Risk, where's the best place for people to reach out?
Yeah, I mean, either they can reach out to me directly. Obviously, I'm pretty easy to find. I'm all over LinkedIn, and it's just Joe McMann at AIC Risk. Either DM me on LinkedIn or feel free to come directly. The website is always an option. There's publicly. The other thing I would put out there is we produce a tremendous amount of content. So, per the Office of the Currency of the Controller, we were asked to write a white paper called "How to Regulate AI." We wrote another white paper entitled "How to Deploy Large Language Models Inside of an Enterprise Safely." We produce weekly articles. We've got a blog. We've got a top 1% podcast. We've got, just tons and tons and tons of information. So if people were going through a due diligence process, feel free to reach out in a informational, educational, content generation type experience. We're happy to help people think about, like, how should they be thinking about AI appropriately, or what are the next best steps to take as part of their journey. But, anyway, we're open and amenable to having conversations.
Amazing. Well, Joe, thank you so much for joining me today. It's been a pleasure having you on and speaking about AI, the future of your company. So thank you so much for sharing.
Appreciate the chance to talk to your listeners, Jacob. It's our pleasure.
Amazing. Thank you.